Hello. So this Instagram page is in a way my personal online trading journal, and I created it because I wanted to document my experiences for my own benefit first, but also to share some of the lesser known aspects of trading. Now, the trading industry is saturated with a lot of great information. There are a lot of creators who teach strategies, who teach price action, who teach different concepts that all work. But I noticed that a lot of the time, the struggle of trading, though talked about, is not really shown. So, what even the transparent creators show is maybe they show their losses, their losing trades, or they show their winning trades, or they show their weekly outlook. But I don't see a lot of the reps, as they say. A big part of training is putting in the reps, getting better at it over time, making decisions in real time, building your intuition, your trading acumen, seeing different scenarios play out over and over again, and being able to make decisions as to whether or not I want to take this trade. So I wanted to share my learnings, not necessarily technical things, not really psychology as it is talked about, but the everyday experiences that we see on the charts, the reasons that we lose trades, the reasons that we take trades that don't play out, the reasons that we take trades that play out. A big part of becoming a consistently profitable trader and being a professional trader, a veteran trader, I saw on a podcast one trader said it is when you develop the ability to see a setup that has actually formed according to your rules, according to your plan and your strategy, and still not taking it. There's a different level of discretion that you have to achieve. There's a different level of intuition, of mastery that you have to attain to be able to see a valid setup and not take it. And I am not there yet in my journey, but I think it is the part of my journey where I am making the most progress right now. And a big part of progressing as a trader is cutting out the things that keep holding you back. So I want to show you an example of one such thing. Remember in my weekly outlook video yesterday, I mentioned, let's start on the daily time frame. I mentioned that on Euro USD, I was looking at this fair value gap for price to trade into for me to then take a trade away all the way to the downside. However, I also said that it was very possible for the week to begin and for price to just melt from where it was, which is exactly what we saw happening. When we go down to the 4 hour, remember this is the first 4 hour fair value gap that I mentioned. That I said it was very possible for price to just tap into it, fill it up, and then continue. I also said that I would only look for a buy if between, let's go back on the daily, you see, remember this purple line signifies a daily swing point. This line down here, a weekly swing point. This line down here represents a monthly swing point. In between that time and now, I've added this red line, which signifies a daily swing point between both swing points. It represented a point from which I would have wanted to take a long trade, going back into the range. Excuse me, going back into the range. Remember, I said if price took out this low without taking out this ultimate low, which I believe is the target, and retraced, I would look to take a sell. So my thinking today was if I'm expecting price to retrace after taking this low and potentially this low, then I can take a short term counter trend buy. However, there are a few things that we need to consider, and this is where having the reps, spending time at the charts, knowing what the market tends to do, knowing what a winning trade looks like, knowing what it feels like, starts to come into play. Now, a few months ago, when I was much earlier in my journey, I would have taken this trade. I would already be in this buy for better or worse, whether or not it was going to be a winner or a loser. But now I am not in this position, and I wanted to share a bit of why. Again, my strategy is a very simple one. Like I always say, my strategy is whether it is a swing point, I only deal with 4 hourly, daily, weekly, and monthly swing points as my points of interest, or 4-hourly, daily, weekly, and monthly fair value gaps. So my support levels in quotes, my resistance levels in quotes are always either higher time frame swing points or higher time frame fair value gaps. I don't really use order blocks, I don't use mitigation blocks, I don't use breaker blocks. The only points of interest, PD arrays as it's called in the ICT space, premium and discount arrays, are fair value gaps and swing points. Now, this is a trade that before now I would have taken. So I had an alert at this red line. This red line is the daily swing point, and this trade is about to lose. I decided to make this video as I noticed that price was reversing, because I wanted to show what a losing trade would have been and how you can avoid them. So this would have been the trade idea. Again, like I said, when price takes out the low at this point, when it did that, so I had an alert, price took out the low. What do I want to see for me to take a position? I want to see I want to see the previous candle that raided that low, or the previous candle after the low has been raided. I want to see that candle engulfed. So I would have wanted to see this blue candle, this 15-minute candle, do something like this, all the way to, let's say, this point. If this 15-minute candle had done that, I would have been confident taking a long position, let's say from here, putting my stop at this low, and then trading into the first fair value gap that had been created on the 4-hour time frame, which is this one that was created during London session today. However, price did not do that. What do we see price doing? Price gave a rather weak rejection candle. You see how there's a very small wick at the bottom, and then this candle did not even really engulf half of this candle's range. Now, before now, when I was a much newer trader, I would take my entries on the 5 minutes. On the 5 minutes, you see that there was clearly an engulfing candle. So I would have been in this trade on the 5 minutes. But over time and from my testing, I realized that stepping up just a few time frames can really save you from taking losing trades, which is exactly what is playing out right now. So I stepped it up to the 15 minutes. Now, when I stepped up to the 15 minutes, it would mean that that 5-minute candle will not be enough to trigger me into a position. I would need a 15 minutes, so that's 3 5-minute periods. I would need price to trade bullishly for 3 consecutive 5-minute periods instead of 1 and getting into a hasty trade. So I would not take this trade on the 5 minutes. However, you see that price eventually gave some sort of a signal, although it is not what I like to see, which is why I did not take this trade. And this is the intuition that I'm talking about. This trade is already about to see this candle is already about to take out this candle's low, which would have been a loss if I had entered into this position. Let's see whether price takes that out. So what happened is that after price did this, of course, it is under a daily low, so there's likely to be some reaction. But the question is this reaction going to begin the pullback into this price point, or is it just going to be a small bump in the road like here, and like here? When price, after printing this candle, if the next candle, this very candle, had been a big candle, had a large range, maybe it engulfed this candle and this candle, I might have taken the trade. You see, and now this low has been violated. That would have been a loss if I had entered a long trade from this point. However, what you see is that when this candle also failed to impulse, the question we ask is, do I want to be trading a retracement? This is a retracement. This is a retracement. Or do I want to be trading the impulse? This is an impulse leg. You see, it has power. It has momentum behind it. This is an impulse. This is an impulse. These price legs in between are retracements. This is a retracement. Do you want to be in the market when it is trading retracements, or do you want to be in the market when it is trading impulses? That's a question that every trader is going to need to answer for themselves. So as part of my process, I kept asking myself, what are the reasons that I might want to take this trade? Because at this point, you could say there was a valid entry. So you see, The next three candles engulfed price, but I want one candle to engulf price. A lot of the time, these are the types of trades that if you take them, might give you a little bit of profit, maybe 1 hour, maybe 0.5 hour, but ultimately end up reversing against you and taking you out for a loss. If you can avoid taking these trades altogether and only taking the trades where you have a lot of confidence, where there's no reason for you not to take the trade, you're on your way to becoming a consistently profitable trader. So when I saw this price action, and you know how in ICT circles you talk about things like balanced price ranges, you want to see a fair value gap violated by another fair value gap, all these things presented themselves. So you see that at this point, this fair value gap was violated by this other fair value gap, which on the lower time frame might have been a buy signal on the 1 minute, maybe on the 5 minute. But the point is this: these are the reasons that I did not like this trade. One, I did not see the type of momentum that I want to see for me to get into a trade. If whoever it is, smart money, the market movers, the buyers, if they wanted to step into the market at this point and push price impulsively in the opposite direction, I would not want to see weak bullish candles barely trading against the direction of the overarching trend. That's the first thing. Two is that this week is CPI and today is Monday. It is generally mentioned in the trading space that Mondays are not really good days to trade for whatever reason. They tend to be slower days. Monday tends to be the manipulation of the week. And being a Monday, a lot of the time, especially on the Mondays when maybe Friday is NFP or Wednesday is CPI, Thursday is PPI, those days tend not to, even if such a day prints a setup, it tends not to be the most favorable setup. So this experience that you gather over months and months of taking these types of trades and losing them is what eventually makes you able to one day see that setup print out and determine, okay, these are the reasons to take it. These are the reasons to not take it. And even if there are an equal number of reasons, let's say you have one reason to take it or two reasons to take it and another two reasons not to take it, and then there's a 50-50 play, there's a 50-50 balance of probability. You ask yourself, even when I take the A plus setups that have a 70% chance of playing out, those trades can still lose. So why would I take a lower probability trade when I know that even my highest probability trades can still lose? The chances of it ending up being a loser are much higher because there was just as much reason not to take it as there was to take it. I want to only take trades where there's an overwhelming reason to take the trade. So what do we see now? What is the outlook going forward? I just wanted to show this example of as this trade was about to lose, I wanted to make this video to record this moment, of course, for my benefit, for my learning, and to help any single trader who is wondering, why do I take trades that lose? How do I get better? What does improving in the market actually mean? It does not mean that you will suddenly be able to predict where price is going. It does not mean that every trade you take will suddenly be good. It does not mean that price will start printing the perfect setups for you all the time. It just means that you sharpen your edge, you hone your skills, you are able to pass on trades because you have an abundance mindset, because you know that more trades will come. This is just Monday. Now, I could have started this week with a minus 1 hour loss or with a 0.5% loss or a 2% loss. And then for the rest of the week, even if I have a good setup tomorrow, even if I have a good setup on Thursday, even if I have a good setup on Friday, all I'm doing is chasing price to recover my loss. Whereas in protecting my capital by not taking this trade, I still have my mental capital, I still have my physical capital, I still have my wits about me going into the rest of the trading week, and it's only Monday. So this is to me and to any trader as well who is on their journey, who is wondering what becoming consistently profitable looks like, who is wondering what, getting good as this thing looks like. This is what I wanted to share with you today, to say, keep going, learn to pass up on trades. Like I say, beginner traders take everything. Intermediate traders take every setup, and then expert traders pick and choose their setups. And a lot of the time, you hear the most popular traders talk about an A plus setup or a B plus setup or a C setup, and what do those look like. A lot of them tell you things like you just have a feel for it. You just know from spending time in the market. I think this is a pretty good example of what that might look like, and I wanted to share it because I don't see a lot of this type of thing being shared in the community. Peace.